to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Mark Mobius, co-founder at Mobius Capital Partners, joining in. Mark, welcome to the show, and always a pleasure to speak to you and get insights from you. Mark, my first question coming to you is overall, what do you make of the global situation? We have concerns that are coming in China on the back of COVID. Plus, you have the Russia-Ukraine tiff that continues to impact markets. And the third thing now, which is anticipated, is as to what Fed is expected to do today in the meeting.
Yeah, it's a very complicated picture we have globally because everyone thought, of course, as we were coming off COVID, that would be the end and we would begin our normal lives again. But that's not the case. What's happened is that a new variant came in to play, and that scared a whole new set of people, and governments began to crack down again on the COVID problem. But then you had the Ukraine-Russia situation, which is very, very severe. It could lead to a nuclear holocaust if it continues in this way. And then in addition to that, the commitments of various countries to Russia or against Russia have complicated the political environment globally. So it is a very, very difficult situation to figure out what direction we're going. The good news is, generally speaking, we're now coming off a very, very bad COVID situation, generally. And generally speaking, countries are beginning to get back to normal.
Right. So overall, Mark, everything said and done right now, what's the kind of impact are you expecting, especially in terms of where emerging markets go?
I think for emerging markets, it's a very mixed picture. Some emerging markets are going to benefit, of course, from this situation. The countries that are producing oil, of course, will benefit from the higher oil prices to some extent. But also companies in countries that are able to supply what was coming out of Russia or coming out of Ukraine will benefit. That means people that are producing wheat, corn, or any of the grains will do fairly well. And then those companies that are doing technology, generally speaking, are going to continue to do well because the demand for technology, not only in normal household living, but also in the military, will be increasing.
Right. And overall, if you see in terms of where especially emerging markets go, which are the sectors of growth that you're envisioning?
The sectors of growth that we are focusing on now is healthcare to begin with, because there's a much higher awareness globally of what's happening with healthcare. That's number one. And of course, testing is going to continue at a high rate, even without COVID. The other area we are particularly interested in, of course, is anything to do with technology. That includes not only the hardware, but also the software. As you know, there is a shortage of semiconductors globally. So any companies that are doing semiconductors or services related to semiconductors will continue to do well. And companies that are involved in software, because more and more companies are using software to enhance and to make their businesses more profitable and more efficient.
So overall, with all of this said and done, where would you actually place the Indian market, especially amongst the emerging markets? How would you rank it?
I would say India is very high on our list, and India is really in a sweet spot, so to speak, because they're now beginning to replace China in a number of areas. As you know, India has always been a very big software country that is exporting software on a massive scale. So that will continue and expand. But also with the need for mass manufacturing on the scale that China has been doing, some of that manufacturing is going to come to India as well. And last but not least, the Indian consumer market is growing at a rapid pace. The per capita incomes in India are going up, and that means that you're sort of on a takeoff stage for greater and greater consumer expenditure and a real impetus for the local market.
Mm. Okay. So overall, with all of this, in terms of India as well, would you say that it is a good idea to do index investing in India, or it is not a good idea to do index investing?
I think it's better to do active stock picking investing rather than index investing. And that's not only true in India, but in other countries of the world. There's a great deal of differentiation taking place. For example, if you look at China, overall, the Chinese market is down because the dominant large companies have been suffering as a result of government regulation. But there are a lot of medium and small companies that are doing quite well. So it's very important to pick and choose which companies are going to be the best performers.
Right. And overall, what are the other moving variables according to you that one will have to consider from here on?
I think the other variables we've got to consider are the impact of currency devaluations. As a result of the tremendous amount of money supply that came into being as a result of COVID, you are now getting an inflationary environment around the world, not only in the US, but all over the world. And that is something that you have to focus on, because companies that are not capable of raising prices will suffer with this inflation.
Right. And overall, currently the kind of up move that we saw in the markets in the last 2 years has been phenomenal. So would you say that this is a continuation of a bull cycle, probably for the next 12 to 18 months? An uptrend is something that could be in the offing, because usually we've always seen cycles which last for nearly 3 years.
Yeah, that's right. I mean, I believe that we're still in a bull market, and that will continue until that 3-year period. Then we've got to watch and see what's going to happen. But you must remember that despite the expectation of a bear market, we do know that bear markets are very short in duration. Bull markets last longer than bear markets. So you're better off being invested, since no one really knows when a bear market will come. But when it does come, it will be a great buying opportunity, that's for sure.
Right. And with this, what's your view coming in with regards to where the commodities market goes? How are you expecting commodity prices to move, firstly? And in turn, would you advise in investing in commodity-linked stocks?
Commodities have gone up quite a lot in anticipation of the rise in inflation. And that will continue to be the case. But the rise will not be as sudden as what we've seen recently. There'll be a continuous rise in the commodity prices. The problem with investing in commodities is that commodities don't pay dividends. You're basically speculating on the rise of price. You're better off investing in a company that's producing commodities, provided that the company has a very high return on its capital, on its investment. Generally speaking, we're cautious with commodity companies because of the environmental problems that they often encounter. So that's an area that probably it requires a lot of work and a lot of care.
Right. And overall, the way inflation is panning out globally, I mean, it's the fastest pace at what we've seen, especially in terms of where the US is concerned. Meanwhile, you have India's retail inflation as well, which has climbed to nearly 6.95. We're pretty much the highest nearly in 1.5 years as well. Clearly, do you think that's something which could pose a concern for the markets going ahead?
Of course, yes. And one of the reasons why we always recommend equities is because equities adjust to inflation. So you're protected from inflation if you're investing in companies that are able to adjust their prices to inflation.
Right. And Mark, from here on, what are the key factors that you would consider, in terms, I mean, what's the advice that you would want to give to any of the new investors?
Well, first of all, study. In other words, don't speculate, but study the companies in which you want to invest. Try to do as much studying as possible before investing. And then secondly, diversify your portfolio. Don't stick to just one or two stocks, but put maybe 15, 20 stocks in your portfolio in different industries and hopefully in different countries, by the way. It's good to be diversified globally. That way you're protected on the downside.
Absolutely, and that's something one needs to consider as well. Thank you, Mark, so much for joining us on the show. Always a pleasure to speak to you and get insights. Thank you. Stay safe and speak to you soon again.
All the best. Thank you. Bye-bye.
Thank you. Bye-bye.